our market expert this morning at the stage. We have Mr. Ambareesh Baliga, independent market expert, now joining us on the broadcast. Ambareesh, as always, a pleasure to have you with us here on the broadcast. Thank you so much for joining us this morning. Great talking to you. You know, I was just thinking, what am I going to ask you this morning? Because the questions I ask you today is the same questions I would have asked you a month ago. You know, what does one do at this stage with the markets? You know, it was expected it'll be a flat opening for the markets. Thankfully, you know, despite all the shenanigans of Trump over the weekend, not resulting in a gap down opening, so to speak, you know, largely flat, which is technically good news at this stage. But I'm going to ask you the simplest of all questions. How is an investor watching us talk about the markets supposed to plan their life going forward in a situation like this?
No, I mean, because see, it seemed that everybody involved in the Iran war wanted an honorable exit. And we were, I mean, moving towards that solution, and now we see this escalation. So, in case, I mean, the talks get deferred, it is still positive for the markets. But then, like you said, I mean, in case the war erupts, we could be back to square one, but I just hope that doesn't happen. I mean, even as of now, I mean, the market clearly shows that market is hoping for some sort of understanding, I mean, between US, Iraq, Iran, and Israel. So I think because of which we are holding on where we are. Because if you see the way the markets, behaved last week, I mean, the way your gift Nifty was on the weekend before this announcement came, I mean, we were up nearly close to 300 points, and people are looking at Nifty going towards 25,000 possibly over the next 1 week or so. Yes, I mean, I think that can get deferred. But yes, I think everyone is, watching this situation closely and hoping that, the outcome is the best possible outcome.
Ambareesh, it's been a record-breaking run as far as Wall Street is concerned. You know, it was a fantastic close on Friday. You know, all eyes tonight on how Wall Street could open India time, you know, post 7 p.m. And do you think, how much of cues do you think Indian markets will take from the way Wall Street is going? Because you look at Asian markets right now; they're all a percent in the red. You know that it's making me look at it as if there are different levels of optimism at play.
Right. No, because I think everything depends on what sort of news bites keep coming from West Asia. Like I said, in case they are moving towards stocks, yes, you'll have the Wall Street opening much better today. But then, in case there is no solution, and the indication is that it could escalate, you'll have the Wall Street opening lower. Yes, surely global markets do provide some sort of an indication for the Indian markets, but then everything depends on the sort of news flows which are there.
Everything depends upon news flow, but talk to us about, from an investor point of view, what is the kind of moves that should be made? You know, there's so many questions in the minds of everybody. You know, we don't know the end to this conflict. It can have far-reaching ramifications, even if a deal is reached. At the earliest, you know, you're going to see impact, ripple effects, go through well into the next year. At least that's what, global experts are predicting. How are investors supposed to, approach this, in terms of what sectors do you think are good to park your money in a situation like this?
The markets had discounted the fact that even if the settlement is achieved, in the near future, we would have the effect of this war at least over the next 1 or 2 quarters. So that was discounted by the markets, because of which the markets had corrected. And again, going by the assumption that the settlement is achieved decently soon, I think India would be one of the better off economies as compared to our peers. And I think one of the areas which will have a huge sort of a boost would be the India EPC players, who would be utilized to rebuild your Iran as well as areas in the Middle East. So something like Larsen and Toubro and possibly Viatec Wabag, which is again in water resources. I think these are the two companies which will benefit quite a lot from the rebuilding sort of a space. And as far as the various sectors are concerned, I think the Indian economy as such should bounce back decently well. And because of which I would say consumer-facing sectors like FMCG, consumer durables, I think that should do well. Automobiles, both four-wheelers, two-wheelers, I think that's the other area which I think should be doing decently well. Specialty chemicals, railways, I think these are the sectors to be looked at.
Ambareesh, quickly, also, there's lots of talk about defense and aerospace as sectors to, to invest in for the long term at this stage.
I mean, that's already moved up because of the positive sentiments for that specific space. But then I think, I mean, the earnings, it'll take a while to catch up. So that's one space where possibly I'll not make fresh investments. Those who have can possibly hold on to.
Fair enough. Also, give us some indications on where do you see the indices at this stage, for general market watchers and observers, and also people who have bought those index funds. Tell us, where do you see Sensex and Nifty, in the next 3 months?
No, again, going by the assumption that we would find a solution to the Iran issue decently soon, I'll not be surprised if we see Nifty at about 28,000, 28,500 over the next 12 to 18 months. Like I said earlier, in fact, I mean, if this issue had not happened over the weekend, we would have possibly seen 25,000 on the Nifty over the next week, 10 days. So here I'm talking of 28,000 to 28,500 over the next 12 to 18 months. And because of which I would say utilize any of these cracks to buy fresh, just be patient and hold on for the next 12 to 18 months.
And if I were to ask you, how do you see, asset classes playing off against each other in an environment like this? Because everything seems uncertain. But there was a time, just a few months ago when gold was that sure shot, when, markets seemed volatile. But looks like, there is technically no safe haven at this stage.
No, that's true. But then see, I mean, like if you look at India as such, I think we are decently well insulated as compared to our peers. Yes, I mean, surely we were affected because of which our, I mean, economic growth also has been tapered down. But then if you're talking of slightly longer term, we should be able to bounce back. So I would say equity still remains, I mean, my top investment bucket. I mean, as compared to the other asset classes, I mean, I believe that gold and silver seems to have done that move, may possibly hold on at these levels or correct. Because if you look at the history of gold, I mean, after a very sharp move, we normally see, I mean, this metal coming down to the earlier levels before the next move.
Okay, fair enough. We will leave it at that. Ambareesh Baliga, thank you so much.